Hello, everyone. I hope you're doing well. Welcome back to the channel. As always, just up front, just a note I am not a licensed insurance advisor. I am not a licensed financial planner, certified, nothing like that. I am just simply a guy that likes the infinite banking process, alternative banking concepts such as velocity banking, and I like talking about them. On my last video, I received a comment that talked about well, as I welcome everyone to do, talk about if I got anything wrong. And one of the comments that was made in that is that a properly designed IBC policy not only addresses the proper amount of life insurance needed, but does so at the lowest cost, which then allows for the most amount of deposits to be used to create your own banking system. And so I'm not going to talk exactly about that comment today. I don't largely disagree. As the keyword that we're going to be talking about is immediate, what I suspect was the intention of the comment was that you're looking at a holistic view of someone's insurance needs, not just now, but throughout their life, and ensuring that they have proper protection in place today and tomorrow. But this comment led me to think that maybe some people think that they need to design a infinite banking policy to meet their immediate insurance needs, which I do not think is a good idea. And I'm going to show some illustrations and some discussions about why I think that is the case today. So let's kind of look at what the typical kind of insurance needs of somebody ends up being, right? So typically speaking, when somebody starts their life, their insurance needs go up, and as they age, their insurance needs go down. At least in a traditional sense, and I understand that as somebody ages in the IBC world specifically, it could be argued that insurance needs are greater no matter what near the end. But let's just go with traditional knowledge for right now, because again, the word we're going to be focusing on today is immediate coverage. So typically speaking, the general rule of thumb is that you want 10 times your income. So the kind of example that I'm going to be showing here today is somebody that's making $100,000 a year, so they would need $1 million in coverage. Let's assume there's no debt, there's no house, there's nothing like that. It's just income replacement. They're married, and that's what they want to focus on. So let's just grab this right here. This is a term T3060 from Equitable. I don't believe Equitable's term products are competitive. I honestly haven't really shopped them at all, so I don't know. I just pulled this because, you know, I have the Equitable Illustrator. It's the easiest one to go to. It's on my desktop. That's the only reason. So you can see here that for about 110 bucks a month, $1,200 a year, you're getting $1 million in coverage. For somebody that makes $100,000 a year, this would absolutely be affordable. Now, the question is, if we understand that their immediate insurance needs is $100,000, what would that look like in an infinite banking policy? So let's pull this up here. So to get $1 million in coverage, so death benefit, $1 million, you end up having, and it's properly structured with for infinite banking in the sense that you're maxing out the paid up additions, maxing out the total cash value that you have. You need to spend $39,000 per year. You are talking a serious multiplier compared to the $1,200. And when you factor in the $100,000 income, you're talking about 39% of the gross income. But it gets kind of worse when you factor in taxes. When you factor in, and this is based on Ontario, I just use the Wealthsimple tax calculator. You're losing $39,000 on 70 to almost $73,000 of income. It does not leave somebody a lot to live off of. Now, don't get me wrong. You can put away $39,000 on 72. Bravo to you. You are going to succeed at life, and you are probably you probably know all this anyway, so you're doing great, right? Now, one thing that I do want to add here is just saying that you'll notice in the total death benefit, this is ever increasing, right? So it goes from 1.1 in the fifth year, it's now 1.6. In the 10th year, you're now 2.3. So your insurance needs do grow. So when we answer the question, why I think infinite bank policy should not be used to meet immediate insurance needs, it's simply due to the immediate costs. This does not mean that infinite banking cannot meet your insurance needs in the future. And remember, that is because of this lovely graphic here where your insurance needs increase and then they decrease. So, if we did a $10,000 a year policy, which I think is certainly significantly more doable on this 72,000, you'll notice, let me enlarge this here. You start out with about $250,000 of coverage, but in year 20, in this case, it's a 30-year-old male on all of these illustrations. Uh, when you're now 50 years of age, you have got your $1 million in coverage. Now, how much insurance you would actually need really depends. So you could, in theory, do a hybrid between this term policy here and have your infinite banking policy at the same time. And if you wanted to keep everything close to this $10,000 range, you could kind of add the two. So you're doing, your 7,800 in your infinite banking, and then your $1,200 to equal out your 10 total. I'm just spitballing ideas. Everyone's situation is going to be different, of course, right? But really, when you're looking at the immediate insurance needs that you need, I really don't think it's going to be met with infinite banking. I do think it's incredibly important to make sure that your foundation is built. And really, life insurance is kind of the foundation for your family. Which is obviously super 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 important, don't get me wrong, but you may also want to think about disability and critical illness insurance depending on what you have at work. Anyway, I hope this makes sense and explains why infinite banking. Honestly, what I'm going to say is I always say that insurance is irrelevant as it relates to infinite banking. And the reason for that is that infinite banking is a concept on how to run your own internal banking system that benefits you. It uses insurance because it's the most flexible vehicle to meet that. And so, because of that, if the insurance did not exist at all, this would still be a good process to use, right? So, as always, I welcome comments, questions, criticism. Let me know what you think below. It is a discussion. So, if you hate it, let me know. I'll ask you why. We'll exchange ideas. And yeah, I look forward to chatting with you all. Have a great one.